Hi and welcome to the Market Alert for Thursday, the 17th of March 2022. So stocks, gold, crypto soar as Fed hawkish surprise triggers inversion, countdown to policy error and next recession. And as it says here in the subhead, what a mess indeed. And according to the news, other news, stocks oil tumble after Fed signals hike after every 22 meeting. So that's going to be interesting as well. So first we had the stocks moving lower after the initial announcement, and then they rallied after because they thought, well, we've got a bit of a reprieve because they're not going to hike. They didn't hike 50 basis points. They just went with 25. But this is just stunning, this one, isn't it? Watch Powell explain how a 25 basis point hike will slay runaway inflation. You just can't make this stuff up. So Powell explained how a 25 basis rate hike will be enough to combat 7.9 inflation, and these people are supposed to be smart. Amazing. Fed hawkish 25-point rate hike signals hikes every 22 meeting as Bullard dissents. That one of the other Fed members, I think they are in an inflation panic. Too right they are. Well, not panicking that much, are they, with 25 basis points? And then we've got this, that the US seems to be getting deeper into the war. Stock slide after Biden to send drones to Ukraine as part of aid package. Don't you just love that aid package? They sent 13 billion over the other day as well. So yeah, they're involved up to the necks. Stock surge on reports Ukraine-Russia war draw up 15-point plan to end the war. This came out yesterday early afternoon. Unfortunately for me, I wasn't able to participate because my internet went off. But the again, I mean, they just put this stuff out. I think it rallied 300 points on the DAX. We'll look at that when we get into it. But today, what news have we got? Anything? Yeah, it's the criminal day. It's criminal day. Lagarde is out today. We've got 9:30 when she speaks, and then we've got the UK Bank of England rate as well, which is forecast there at 0.75. So it looks like we've got a rate increase coming today from the Bank of England as well on that projection. Interesting. We've got Philly Fed in the afternoon and unemployment claims and also industrial production. But that's an interesting one, isn't it? Keep an eye out for that at midday. Could be a headline, that. And let's have a look at the Dow, its reaction to yesterday. I'll find it in a second. Too many charts. So here we go. The Dow moving up yesterday to the resistance to the left on the news of the Fed rate cut, and the reason for this move is because they can. I mean, it's as simple as that, isn't it? They've taken the positives, they moved the market to the upside, and that's what we see at the moment. There is a pretty good chance they'll continue to move this to the upside as well, because your reaction would be that they would slam it to the downside, which it did initially. But there you can see that we've got two further upside targets. It's going to take a bit more than 0.25% to sink the market, isn't it? Unless, of course, the banks want more QE, then they will make a concerted effort to actually make it very painful for Powell that he stops increasing rates and goes back to QE. And I think we all know we're going to go back to QE, don't we? Here's the normal reaction to a rate increase where the market was pummeled. But then it was discounted, and again, the market brought back to the upside. And at the moment, we're heading back up, and I would suspect that we're going to continue to move to the upside as well during today. In the German DAX, you can see that, this is the DAX. This is the daily of the DAX. So yesterday, we traded through the 78% retracement that we drew in. That happened after the rate announcement, and we've got the 89 and the 50 EMA in the way on the upside, but bullish at the moment on the overnight 30-minute chart. Here's the ceasefire plan of 15 points, market driven up out of nowhere, and then trading sideways until we had the Fed announcement, and then the market moving back to the upside. The moment stuck in a bit of a sideways range. The big news of the month, I suppose, is out of the way now, that the rates have gone up, and it's just a matter of waiting to see if they can continue with this agenda. Apparently there's another 5 rate increases to come. Good luck with that going forward. And also Powell talking about supply chain issues as well. And he also, the reason for the market going up is very simple, because he has hinted that he will do anything, even if it means stopping the rate rises and actually reducing rates if required. You know, they've got all the tools, they will use all the tools, is basically what he was saying. And that's what was bullish for the market and allowed it to move up thereafter. So yesterday in the 5-minute chart, we started off with a bit of weakness to the downside. The market then managed to move higher, but until it had come back to their 78% oversold crossover, the market then was able to move higher. It then rounded over, as you can see there, and then came back again. You've got a nice retracement there, again oversold. We had divergence here on the upside as well. You can see that there, where the market's tried to move higher and the momentum is lost. You've got the supply there as well, and then the market back down. I get to the retracement, and fortunately there you've got the upside move being consistent with a play in the market that was actually oversold, retracing 78% and then just moved to the upside. I wasn't on that. Like I say, the internet went down at that point. Then we had a sell-off after the market had moved up sharply. What was the move to the upside? Let's just have a quick calculation. Yeah, it was 300 points, low to high, 301 to be precise. The market then meandered, and then of course we had to wait for the FOMC, which came in here. You can see there the market down, and then when Powell said, but even though we're increasing rates, we will always have QE as an option. And that has moved the market to the upside, where it's currently still showing a positive move to the upside. It needs to take out yesterday's high, which is just above here. It's only 50 points above there, which can be easily achieved with 1 bar these days, even in the 1-minute chart, as the level of volatility continues. Let's have a quick look at the currencies. We'll have a look at the JPY first. Let me just move this chart over a bit. There we go. And in the JPY, there we go, that's better. This moving higher because the dollar cratered yesterday, and the reason the dollar cratered is because they just doesn't believe that that Powell is going to be able to continue to raise rates. So the dollar went down, and unusually the Japanese yen moved to the upside on that news. That was a bit of a move to the downside initially, which was seen, but you know, not a lot. I mean, this is where it the news came out, but the dollar didn't react very well, and the yen continued to move to the upside. But you can see they were getting ready to move it to the downside, but it was then moved to the upside. And the same in the pound as well. You can see this moving up off the lows yesterday, and also moving now as the dollar is once again moving to the downside. The 30-minute pound, again, you can see here, this is the example I was talking about. There's the reaction as the dollar moved higher initially, and then again, like say, when Powell said that he could actually consider printing more money, and they've just printed another 1.5 trillion, like I say, 13 billion's making its way to the Ukraine. Then all of a sudden the dollar was devalued, and gold and silver were allowed to move up. That was the reason for the dollar decline, which we'll see as we look now in the metals and the dollar. Starting off with silver, the market was allowed to move back up yesterday. No great move, coming off the 78% retracement. Next move is going to be down to the 200 MA. Now they've got that out of the way. I don't see why that should be any different. The 800 million ounce Bank of America position remains. They want to get it down to by the end of the month down to the 200 MA, so we'll see. But it's already started to move lower now, as you can see, coming back below yesterday's high already. In the 30-minute chart, need to take out the 200 MA, and then we can start heading towards yesterday's low. So weakness already appearing in the metals. Crude oil starting to show a bit of strength there. It's not over on the upside for crude oil at all. We've had a big pullback, but we'll be going back to the upside as we go into more into the spring, and certainly into the summer. We're going to see higher crude oil prices, especially as the war is going to continue for some time. It's not over by a long shot, and like I say, the US now are dipping their toe in the water somewhat with funding drones with missiles, etc., and also the fact that they sent them $13 billion says that they're engaged, as far as I'm concerned. US dollar back. I got a chart back off ETX. There was a bit of a gap in the chart, and there's a bit of a data missing off the chart as well, because for whatever reason, they just didn't get it up and running. Anyway, the dollar is down a bit overnight. This huge selling there, don't take so much notice of, because, like I say, some of the data is missing off the chart. That would probably be it would be above average. But because we've got a week's worth of data missing off this chart, when they roll the contract over, the volume automatically increases, because obviously it's the nearby contract. So you'll see that as we go forward. And you can already see overnight there's a lot of volume there for a tiny bar as well. So that's why it looks bigger than it should do. Okay, that will do it. Let's see what the market's reaction is today. For me, there's no reason why they can't move the market up. And again, we're going to get the regular ceasefire thing coming out. It seems to be a pattern there every day. I did say this from the start of the war, that any sort of ceasefire or prospect of ceasefire, whether it's real or just propaganda, is designed to bring the market back. And it seems that it's engineered to bring the market back just before the Dow opens, doesn't it? Okay, that will do it for this one. If there is anything else to report, I'll let you know. But as ever, thanks for watching. See you in the next one.